Hello, thank you for joining today's daily webinar. We're going to go over your live questions here today. Today's topic is best time to process a Roth Solo 401k conversion. As always, today's daily webinar is for educational purposes. We are not going to provide investment or tax advice on today's daily webinar. Please like this video, share it with others in your network as it helps to get the word out to other solopreneurs like yourself. Okay, so with respect to the best time to process a Roth Solo 401k conversion, there are a few factors, and we'll discuss those. The first one is if you're converting pre-tax Solo 401k funds to the Roth Solo 401k plan, a good time to convert may be during market downturns. I know we're experiencing a up and down year so far with respect to markets. So this may be a good year to process a conversion of your equity investments, whether stocks or mutual funds or index funds, so that you can convert those at a low price. So that way, once the market goes up, all those gains will be reaped in your Roth Solo 401k because you will have converted what's referred to as an in-kind conversion of your equity investments held in the pre-tax Solo 401k plan over to the Roth Solo 401k plan. That would be done at a low market value. So, of course, it's tough to time the market. So maybe the particular investment you're looking at and held inside that pre-tax Solo 401k plan has already taken a market beating, or maybe you're going to wait to convert later this year. You just need to make sure that if you do want to process the conversion of those pre-tax Solo 401k investments over to the Roth Solo 401k, you want it to count for tax year 2025, you need to get that conversion processed by December 31st of 2025, because conversions are reported in the year that the funds or the assets are actually converted to the Roth Solo 401k plan from the pre-tax Solo 401k plan. So it's different than the contribution rules. The Solo 401k contribution rules are oftentimes confused with the conversion rules. The contribution rules allow you to make a contribution to the Solo 401k plan for the prior year all the way up until your business tax return due date plus time they filed extension. For example, we still have a lot of clients that are making contributions here in 2025 for tax year 2024 because they haven't told their business tax return extension due date to make those contributions. Similarly, we find that many individuals are even opening a Solo 401k plan here in 2025 for tax year 2024 because under the regulations, you still qualify to open a plan in 2025 by your business tax return due date plus extension so that you can make both employer contributions and voluntary after-tax Solo 401k contributions. You just wouldn't be able to make employee contributions for 2024 if you haven't opened that plan yet. Of course, if you've already opened the plan, that means that you signed the plan adoption agreement by December 31st of last year, then you can still make all contribution types. Or if you opened the plan prior to last year as well. Give me a moment here. So back to going over the best time to process a Roth Solo 401k conversion. We'll pick up on that in a moment here. Let's take a look at a live question here. We've got a question here from Jorge that reads, how do I know if my solo 401k plan allows employer Roth contributions? Do all plans automatically allow employer Roth contributions? Great question. So no, not all plans allow for employer Roth contributions. However, the plan that we offer does. So you're referring to the new contribution type thanks to the Secure Act 2.0, where it used to be you could only make employer profit sharing contributions on a pre-tax basis. Well, Secure Act 2.0 changed the rules where now you can make employer contributions as Roth instead of pre-tax. So yes, the plan that we offer already allows for it. Your plan's already drafted to allow for it. So there doesn't need to be any type of update made to the plan. What is more, you can make those employer Roth contributions to the same employee Roth solo 401k bucket, just like you can make employer pre-tax contributions to the same employee pre-tax bucket, because they're all Roth funds and pre-tax funds respectively. So hopefully that answers your question. Of course, if you open a plan with someone else, like a Fidelity or Schwab, where they're providing the plan, their plan does not allow for employer Roth contributions. The one at Schwab may allow for employee Roth, but not employer Roth contributions. Okay, I don't see any other questions for now, so let's continue here, and then we'll keep on monitoring the live chat here for any more questions. So again, please like this video as it helps get the word out to other solopreneurs like yourself. Please subscribe to our channel for more great videos as well. And we're discussing best time to process a Roth solo 401k conversion. We just talked about converting pre-tax solo 401k funds to the Roth solo 401k. We talked about it might be best to process those conversions during a down market year like we're having now. Now let's talk about another scenario. With respect to processing a conversion of pre-tax funds to the Roth solo 401k, so we're talking about pre-tax solo 401k funds to the Roth solo 401k account. It's important to understand that you cannot change your mind once that conversion has been processed. So that's another item to consider before you process a conversion. You cannot say, well, I did process this conversion, but I've changed my mind. I'd like to go back and unwind it and treat it as it never happened, or go ahead and just move those back to the pre-tax solo 401k. Unfortunately, the IRS regulations do not allow for that. So as a result, that's one item to keep in mind when you're looking to process a Roth solo 401k conversion. Okay, let's give me just a moment here, and we're going to go over some more items. Okay, so let me share a screen here as well. Now, with respect to processing a conversion, we're talking about converting pre-tax solo 401k funds to the Roth solo 401k. You've probably noticed that I'm not going over converting a pre-tax solo 401k to a Roth IRA. And the reason I'm not going over that is because you generally cannot convert pre-tax solo 401k funds to a Roth IRA unless you meet a triggering event. A triggering event is where you're age 59 and a half, no longer self-employed, or if you have funds inside that pre-tax solo 401k stemming from where you transferred an IRA or a former employer plan to the solo 401k plan. Those can be converted to the Roth IRA. However, if you make an annual contribution to the solo 401k as a pre-tax contribution, those funds cannot be converted to the Roth IRA unless you're age 59 and a half or no longer self-employed. However, you can convert those to the Roth solo 401k, and no, you cannot then turn around and transfer those Roth solo 401k funds to the Roth IRA. You still have to meet one of those triggering events. And it's important to note that these are statutory rules. Statutory meaning that they are rules under the IRS code. In other words, we did not draft the plan to put those type of restrictions. Because again, whenever we draft our plan documents, we draft them for the maximum flexibility under the law. So those are statutory regulations with regards to not being able to convert to a Roth IRA if you're trying to convert pre-tax solo 401k funds. Now, if we're talking about voluntary after-tax solo 401k funds, those can also be converted to the Roth solo 401k or to the Roth IRA. Those don't have that restriction of not being able to convert it to the Roth IRA. That restriction applies to pre-tax solo 401k funds or holdings, not to voluntary after-tax solo 401k funds. So in sum, those voluntary after-tax solo 401k funds can be converted to the Roth solo 401k or the Roth IRA. With respect to the best time to process a conversion of voluntary after-tax solo 401k funds, the best time to do that is as soon as you make that voluntary after-tax solo 401k contribution, you're going to want to convert those voluntary after-tax solo 401k funds immediately to the Roth IRA or the Roth solo 401k so that there are no gains. Because whenever you process what's called a mega backdoor Roth solo 401k conversion, you first make that voluntary after-tax solo 401k contribution, and then those funds get converted to the Roth solo 401k or the Roth IRA. And you have to convert all the funds in that voluntary after-tax solo 401k bucket at once. So if there are any gains in there and those get converted to the Roth solo 401k or the Roth IRA, the gains are going to be taxable, but not the basis. So that's why it's always a good time to process that conversion from the voluntary after-tax solo 401k fund bucket to the Roth solo 401k bucket to stem the taxation of any gains. Let's go over some information with regards to the procedure to processing a conversion, whether you're converting pre-tax funds or voluntary after-tax funds to the Roth solo 401k. So obviously, if you don't have a Roth solo 401k holding account established yet, that's the first thing you need to do. And this is for someone that already has a solo 401k with a company like us, for example. And let's say you're getting ready to do a conversion of your pre-tax solo 401k securities or funds to the Roth solo 401k. Well, first you need to open up that holding account. It's still the same plan. You just have to have a separate holding account to track those Roth solo 401k funds if you don't have one open already. So once that's open, whether it's a bank account or a brokerage account, let's say it's a brokerage account at Fidelity or Schwab. So you would open up that Roth solo 401k brokerage account at Schwab under our plan, and we can shepherd you through that process. Then and you want to make sure that that additional brokerage account or holding account is opened up in the name of the solo 401k plan, and that it includes the word Roth in parentheses if we're talking about a conversion. And let's say both spouses, let's say it's a two-participant plan where both spouses are self-employed in the same business. Let's say it's a LLC, a self-employed business, and both spouses are working under that business. Well, the plan is sponsored by that business, but each spouse would have separate holding accounts, aka brokerage accounts or bank accounts, under that solo 401k plan to hold their respective funds, including Roth funds and pre-tax funds. We'll talk about voluntary after-tax in a moment. So once the Roth solo 401k holding account is ready, then it's time to convert those pre-tax solo 401k funds or equities in kind over to that Roth solo 401k bucket. And if you use Fidelity or Schwab, there's a form that you would submit to them to process that so that they can convert those specific securities. Or you can give them a call and they can do it over the phone. But we have those forms on our website that you would submit to Fidelity or Schwab. And once those funds or securities have been converted to the Roth Solo 401k, then you would fill out our online conversion form so that we collect the necessary information to issue that Form 1099-R. Because neither Fidelity or Schwab, if you use them, or even your local bank, will issue that 1099-R. But we offer that service at no additional cost to our clients who timely request that Form 1099-R. So you would complete that online conversion form on our website. Let me try to go there so I can show you what it looks like. So this is the forms section of our website. It's an online form that you would fill out for us to collect the necessary information to issue that Form 1099-R. It's this form right here under in-plan conversion, pre-tax to Roth Solo 401k plan. You'll also see the one of after-tax funds to the Roth Solo 401k or after-tax funds to the Roth IRA. Okay, now let's talk about, let's see, looks like we have another question here. We'll take a look at that question and then we'll come back here. Let's see here. Here's the question here. It reads, if I make a Roth employer contribution, do I need to report to my solo 401k that I did that contribution? Is there a specific form to report it? Great question. So the actual contribution gets reported on your tax return. So let's pull up the section here for how to report employer Roth solo 401k contributions. So this is a great link here. Let me share that with you after I get to it. Reporting contributions right here. You're going to want to take a look at this page here. You may want to bookmark it because this is great. It's a great resource whether you're reporting pre-tax contributions or Roth contributions, and whether it's employee or employer contributions. You need to report them accordingly. And we have little small guides here for how to do that. And we have it broken down by entity type with regards to how to report those contributions. So take a look at that page here. It'll go over how to report those contribution types, whether pre-tax or Roth, on your tax return. And in your case, the employer Roth contribution you will get reported on the employer tax return, not the personal tax return. It depends on how your business is taxed. Okay, as far as that's how you report it on your taxes, on your tax returns. Now, whenever you make an employer Roth solo 401k contribution, even though it goes in as a Roth contribution, if it's a Roth employer contribution, it's going to have to be taxed as an in-plan conversion. So even though it goes in as Roth, a Form 1099-R is going to have to be issued to report that as a taxable in-plan conversion. So you would go to our website and fill out our conversion form. This one right here. Let me scroll down to it. This in-plan conversion form titled Pre-Tax to Roth Solo 401k. So that's very important to understand that anytime you make an employer Roth solo 401k contribution, even though it goes in as a Roth contribution, it's got to be reported as a taxable conversion. Okay, great question. So again, today's webinar is we're covering best time to process a Roth solo 401k conversion. Let's go over a few more things here. So let's talk about what you need to consider before you ever process any type of conversion. Specifically, if you're converting pre-tax solo 401k funds to the Roth solo 401k plan. Keep in mind that that's going to be a taxable conversion, which means that you're going to have to pay taxes on that amount converted. What is more, it's going to be reported as earned income, which may push you into a higher tax bracket, therefore required to pay more taxes. What is more, you cannot pay those taxes with funds from the solo 401k plan. The taxes due on that conversion are paid with personal funds, and those are paid by the time you file your annual tax return for the year. So you might be making estimated tax payments. You would make it with those funds, with personal funds, but you have to do it with personal funds and by your business tax return due date. So a reason why you may not want to process a conversion of pre-tax solo 401k funds to a Roth solo 401k is because you may not have funds in a personal bank account to pay the taxes due on that conversion. For example, let's say you convert 100,000 value of pre-tax solo 401k funds made up of cash and or securities. Well, that 100,000 is going to be fully taxable, and it's going to be taxed at your earned income tax rate. So it might jump you into a bigger tax bracket, and you may not have the funds to pay the funds on that conversion. And again, there's no do-over. You can't change your mind later. Or another reason why you may not want to convert is you might anticipate that you're going to be in a lower tax bracket when you retire or when you get older. And therefore, you might want to wait to do the conversion at that time because you might be in a lower tax bracket. So it's something you really need to strategize with your financial advisor, because it's going to impact probably your estate and your full current financial picture, and also from a beneficiary planning perspective, because keep in mind that when you pass away, those Roth solo 401k funds will flow to the beneficiaries of your account. And if they're in the Roth solo 401k, they can transfer it to their own Roth IRAs and take distributions, generally over a 10-year period or by the end of the 10-year. And it will not be taxable generally, because those are Roth solo 401k funds that would get transferred to beneficiary Roth IRAs. So from a life planning perspective, your financial planner or estate advisor might say, hey, maybe you should convert now, or maybe you should wait till you're a little bit older when you're maybe in a lower tax bracket. So those are some examples. Okay, let's see here. Looks like we have some more questions here. We've got a question here from Richard. I have a client that used another firm to set up their solo 401k last year. Can they change to your firm in 2025 and still make 2024 contributions to the same trust account, but with your plan? Or is that considered a new plan? Great question. So the quick answer is yes. Whenever you switch from one plan provider to another, that's referred to as a restatement, which means it doesn't trigger having to file a Form 1099-R or a Form 5500 easy to close the plan, because you're not technically closing your plan. You're just changing providers from provider A to provider B being our company. So therefore, as long as that plan was open prior to December 31st of 2024, or by then yes, you're going to be able to still make contributions to the plan under our plan. Once it gets moved over to our plan, you'll be able to make all contribution types, whether it's employee Roth, employer Roth, employee pre-tax, employee Roth, voluntary after-tax contributions, and you're going to have until your business tax return due date plus timely filed extension to make those contributions. And I'm not sure where your clients' funds are currently at, but we do have a lot of clients that will convert their existing Schwab solo 401k or Schwab or Fidelity solo 401k or Census solo 401k or one of our direct competitors solo 401k to our plan, and it comes with the $1,500 contribution credit. So with the $1,500 contribution credit, your client is going to be able to qualify to take a dollar for dollar tax deduction on their employer's business tax return, so the self-employed business tax return, in $500 increments for a total of 3 years. That's called the auto contribution credit, and they're not even required to contribute in order to have that feature added to the plan, and that also applies when the plan is restated. We can add that auto contribution feature to the plan, and we also can add that to existing clients because the auto contribution credit was not available till about the end of December of 2023. So any plan open prior to that year with us, we can restate that plan to add this auto contribution credit, where you get a $1,500 deduction on your business side, business tax return, and $500 increments over a 3-year period. And you spread it out over 3 years in $500 increments. And again, you don't have to make a contribution to qualify, and you can get that $500 auto contribution credit by filling out Form 8881, and we provide information on how to fill that out step by step. So it's $500. So let's say you restate that plan this year, your client would qualify for that $500 credit for 2025, a second $500 amount in 2026, and the final $500 amount in 2027, for a total of $1,500 over those 3 years. And that's going to pay for the more than enough. That's enough to pay for your fees to have a solo 401k plan for many years. So again, both current clients qualify. We can add that feature to their plan if they don't have it already. And new plans that are open, we automatically add that to the plan. All right. So thank you for your participation today. We've gone over some great information. We'll be going live again tomorrow. Again, today we discussed the best time to process a Roth Solo 401k conversion. We talked about converting pre-tax solo 401k funds to the Roth Solo 401k. We also discussed regarding converting equities that you may hold in that pre-tax solo 401k account during a down market year, where you would convert those at a lower value, and then they would be held in the Roth Solo 401k. So when the market goes back up, you're going to reap those gains inside the Roth Solo 401k, and therefore grow tax-free. Looks like we have a follow-up question here. Let's see here. I'll send 1 or 2 clients to your firm right away. Your plan is better than the others. Oh, well, that's great. We really appreciate it. We get a lot of clients through the institutional side. So a lot of advisors have been using us. We've been around since 2009. And exponential growth in the institutional. We have another question here from Jorge. If I make investments to crypto or real estate, for example, do I need to do another type of reporting of the investment to my solo 401k? Great question. So our plan is self-directed, which means that not only does it allow for investing in traditional investments like equities, but also alternative investments, whether it's cryptocurrency, precious metals, real estate, promissory notes, private equity, and so forth. So we were talking today about the best time to process a Roth Solo 401k conversion. Well, many of our clients have also been investing in cryptocurrency for the past 10 years plus. And many of them may have some crypto that may have gone down in value tremendously. So you can also convert pre-tax crypto held in your pre-tax solo 401k to the Roth Solo 401k. So if your crypto has been beat up in market value, you can convert that over to the Roth Solo 401k. And now when the crypto goes back up, it'll be at a higher value. All those gains will take place in our Roth Solo 401k. So not only is there a strategy to do a pre-tax solo 401k conversion of equities like stocks and index funds, to name a few, but it also works well with cryptocurrency, even real estate. Let's say you have a property where the market value has dropped significantly. That can be converted to the Roth Solo 401k if it's held inside a pre-tax solo 401k. So that way you'll pay taxes at a low value now, but you'll reap all the gains in the Roth Solo 401k. Same thing with precious metals. I know that right now gold is hovering near 4,000 an ounce, but let's say that gold goes back down, and let's say you buy gold at a high price now with your pre-tax solo 401k, and then gold markets go down. You can later convert those precious metals from the pre-tax solo 401k at that lower value over to the Roth Solo 401k plan. Now, to finish answering your question, you do not need to notify us when you make an investment in an alternative investment like crypto or real estate for that matter. With respect to crypto, and we've gone over this in the past as far as a webinar, and we'll go over in the future. Some items to be aware of when investing in crypto is that you need to open up an exchange account with the cryptocurrency in the name of the Solo 401k plan. You then need to have a separate bank account in the name of the Solo 401k plan. You then link that Solo 401k bank account to that cryptocurrency also in the name of the Solo 401k plan. And then it gets funded from the Solo 401k bank account to that cryptocurrency exchange account. And then you make the investment in crypto through that crypto exchange account. So there's a procedure for that. Let us know if you want us to send that over to you. But when investing in cryptocurrency, there's a little bit added work that needs to be done because you have to have a Solo 401k at the exchange. It's still under our plan, but the account has to be opened up in the name of the plan and linked to that Solo 401k bank account. All right, one last thing to go over with regards to best time to process a Roth Solo 401k conversion. We discussed earlier how you can make employer Roth Solo 401k contributions stemming from Secure Act 2.0. And we also discussed how even though it goes in as a Roth employer Solo 401k contribution, it's still considered a taxable event in the eyes of the government. And therefore, it's got to be treated as an in-plan conversion. So the best time to do that employer Roth Solo 401k contribution is generally, let's say that you want to do one here in 2025. You generally want to do that well before the year is over because we need to make sure we treat that as a non-taxable conversion, or excuse me, as a taxable conversion. So let's say, for example, you make that contribution, that employer Roth Solo 401k contribution by December 31st of this year. Well, that's going to be treated as a conversion occurring this year. So that's going to impact your tax bracket. So your personal tax bracket, because it's going to be taxable. But if you wait to make that employer Roth Solo 401k contribution next year in 2026, which you can make next year in 2026 for 2025, it would count as a contribution for 2025 if you make it in 2026 by your tax return due date plus timely filed extension, but it would also be counted as a taxable conversion in 2026, not 2025. So that's a little bit quirky. So keep that in mind as well. All right, again, we really appreciate you asking your questions today and for participating and for joining us. And again, please like this video as it helps get the word out to other solopreneurs like yourself, and have a great rest of the day.